Hey folks, Bob Desmond over in Tuscany. I'm recording this from a little town called San Giacomo. I'm probably mispronouncing that. I'm working very, very hard on it for our Italian viewers out there. So please bear with me. I've been corrected a few times. We're going to talk about the charts in a moment. But first, I just wanted to take you on a little bit of a tour of how beautiful this area is here in Tuscany. I mean, right back there is the town itself, very, very ancient, very, very old. Right there is a church. The bells have just gone off. It's about 6:30 a.m. here now, probably around about 1 a.m. in New York, East Coast time in the States. Vineyards there, beautiful pool. We rented out a farmhouse here. As you can see, it's right here. And it's really just a stunning, stunning area. If you've never visited Tuscany, I really strongly suggest you do. Life is too short. Roosters are crowing right now. You'll hear them on and off. The church bells go off every hour. The one right there, that had just gone off. Another in the distance, and it's really just surreal how beautiful it is here. So getting to the charts, last night I was on talking with members about the markets and just checking in with them because I've been pretty much checked out, kind of on vacation, a workation, if you will, trying to relax a little bit, recharge the batteries, but still checking in on the charts. Now, I'm going to head inside and go over the charts because my computer's getting a little bit wonky, but we'll continue this from there. See you there. Okay, folks, continuing on. The rain has subsided here a little bit. Futures at last look in the States were up due to Siemens coming out and announcing forward-looking guidance. I believe Siemens is a European company. Futures perhaps up on that. Will they fade? Will they rally? Who knows? It really doesn't matter. What matters is the Fed, as always, and the debt ceiling. Now, yields are moving up on the week. Why? Debt ceiling. People are selling our bonds, and they are increasing yields as they sell those bonds. Will it last? Well, if they come out with a deal, then I think that yields are going to back off. And if equities come under pressure, which I think they're going to, then you're going to see money move into bonds. That's why yesterday I added more to my TLT trade by a little over a third. Now, looking at the TLT yesterday, we had a reversal bar at this lower band of support. So if the Federal Reserve comes out, if the U.S. government comes out and announces that they have a deal, I suspect that you're going to see yields come off. Why? Because we're going into recession, and the rest of the charts are telling us that, because as we look past, we'll talk about the dollar for a moment, as we look past the strength in the U.S. dollar, I think that is more of a flight to quality in terms of money leaving equities. You're seeing the larger cap, broader names in the Dow Jones Industrial Average, S&P 500 come under some pressure. And we'll go to those charts in a moment. Yesterday, as I was watching the equity market, even here from Tuscany, I was watching the yield curve, the VIX break out. There was a big surge in volatility yesterday afternoon. And the chart that really shows that spike in volatility, believe it or not, is accused. And that's, to me, is one of the most important charts other than the Dow Transports. Dow Transports continue to weaken up here. They were down nearly 1.5% yesterday. That's a problem. So I think that what's happening here is that you're seeing money leaving certain sectors of the cyclicals. The economy, the U.S. economy is going into recession. And again, that's why I think they come out with this debt ceiling announcement. You're going to see yields come off. Stocks may rally briefly. Overall, they're going to roll over, and you're going to see money rotate into bonds. So we're buying call options going all the way out into September, because we're expecting sideways consolidation on bonds with a bias perhaps to the downside until such time as they reach a deal. Dow Jones Industrial Average, break below support. We spent a couple of days, sorry, my mouse is a little bit wonky here. Spent a couple of days consolidating, and that consolidation was broken yesterday with a push to the downside, and volume was not that bad. Now S&Ps, they're rolling over, momentum rolling over on stochastics, they're holding on to support, but we're in a sideways consolidation, and if we break the support level, I think we're going down to 4,000 pretty quickly. Now the Qs, early on when I took a peek at the charts yesterday, they were breaking out above daily support. By the end of business yesterday, and I have a short position on here, I want to add more. By the end of business yesterday, they had faded. Maybe they'll break out today, but yesterday they did not break out. You saw selling into the close. That's usually a bearish event. So you're seeing futures at current up in the pre-market. Don't chase the bright green futures. Worry about the close. It doesn't matter what we trade intraday. What matters is the close. Do we close up, which we did yesterday, but was it a quality close? No, it was not. We were considerably higher on the day. We faded to close back down below support. What does that tell us? Sellers above. Moving on to emerging markets really quick here. We're long of EMXC. This is emerging markets ex-China. You want to avoid this. Very strong U.S. dollar. That is not good for precious metals. It is not good for emerging markets. So avoid this. There's going to be a time to re-enter this name. I still own it, but I'm not buying more here in any type of a pullback until such time as we get a pullback in the markets, perhaps a severe pullback in the markets, a top out in the U.S. dollar. Then I want to go in with cash on hand and start buying emerging markets. Same thing holds true for gold. You know, I still own gold. I didn't sell any gold. I did sell some electronic silver, and I sold some mining stocks a couple of weeks ago, and thank God we did. Now gold yesterday dropped 1.5%, and going to the mining stocks, GDXJ, which is what we are still long of, they closed down nearly 3% on the session, and we were long of NUGT, which is a leveraged ETF, and we lightened up there. I have a glare here, so pardon me for creeping on the camera. Down over nearly 5.5% on the session. So we sold properly. We sold a while ago, and now we're going to be looking to sell puts, perhaps open up a strangle cash flow generation, and get back in on that position on a pullback to support. Right now, I don't think it's the time. Why? All you need to do is take a look at the inverse correlation of the dollar relative to the mining stocks, and that'll tell you all you need to know. Same holds true here for silver. We sold back here, and the shares have pulled back dramatically. They were down over 2.5% yesterday. This is a leveraged ETF, so be careful. But we're going to be looking to get back in on this. But right now, what you're seeing is the market price in a bout of deflation. The Bloomberg Commodity Index has come in. It's being reflected now in, I haven't taken a look at oil. I'd like to take a look at oil. Oil, West Texas Intermediate crude. And I lost the connection. We're in Tuscany, folks, so the internet here is not that great. Now, there are certain really great things about Italy, in particular the food, but the internet is a different story. Right? We're going to have to come back to oil at a later date. What else do we want to take a look at? I think we're good. I think we're good with what I wanted to talk about today. Here's the energy stocks. I can't get oil up because I can't get proper internet, but you can see that energy stocks are rolling over, breaking support. This was a dead cat bounce, so I don't even need to look at the price of oil yesterday. I can pretty much guarantee you that if the XLE was down nearly 2.5%, in all probability, the price of oil was dropping as well. What does it imply? Weaker economic growth. These are both heavily correlated energy stocks along with oil. So beware, folks. I think that this market is quite possibly weakening up. You've got very few names in the queues that are really driving up the technology space. The semis are looking okay. You have NVIDIA earnings coming up pretty soon. So that may keep a bid under the markets, but after that, I'm not quite sure what's going to keep this market up. So, and with that, folks, from Tuscany, your intrepid reporter, talking to you about the U.S. markets. Thanks for being here, and I'll leave you off with a look at a more clearer view of what we had earlier, because it was raining a little bit more heavily back then. And you can see that just the beautiful countryside here. Absolutely stunning. And that's it. I'll talk to you folks later, and be well.